a very exclusive chat lined up, and as we enter 2025, we have set our sights on the capital markets segment. My colleague Sajit Mangat is speaking to Sundararaman Ramamurthy, who is the MD and CEO of BSE, on their growth outlook for FY25 as well as more of the next year. Let's cut across to that conversation.
Thanks, Puneet. We have joining us today Sundararaman Ramamurthy, who is the MD and CEO of BSE. Mr. Ramamurthy, thank you very much for joining us on NDTV Profit, and wishing you a very happy new year. To begin with, sir, it's been a very interesting 2024, hectic year for the capital markets. You had record IPOs, record trading, you had regulatory intervention to cool down the markets, and then you have the retail frenzy for IPOs and the futures and options segment. How do you sum up the 2024 year, and going into 2025, how do you, what is the kind of outlook that you have?
First of all, thanks to NDTV and its viewers for having me here, and wish all of you a very, very happy and prosperous 2025. Yes, indeed, 2024 was a year of sorts, with a significant large movement in terms of ups and downs and new highs and new lows. In terms of a return perspective, if you just take from Jan to December type of a return, Sensex returned around 9%, which is sort of lower than what it used to return in the previous years. Midcap appeared to be the flavor of the year with around 20+% as a return. Going forward, when we look at it, it's a mix of multiple things that we are having in front of us in terms of 2025. As far as India is concerned, with a very strong and stable regulatory regime, policy formulation capability, with our thrust on Make in India and our thrust on ease of doing business, and the expectation that fiscal discipline will continue and there could be an RBI rate cut, and with a good pipeline of IPOs, there appears to be a lot of positive points for India to continue to do well in 2025. Having said that, the geopolitical situation is something which cannot be ignored. The new US government and what could be the ramification on multiple things, including H-1B visas and the trade part of it, that is something which we should be keeping an eye upon. The developing situation in Europe and probable impact in the Middle East and the oil prices, the Russia-Ukraine stuff. So many geopolitical things also come into the front for us to consider. In the midst of this, I'm sure with the positives which India internally has, we will surge ahead. That's the view for the outlook for the 2025.
Liquidity pool is something which we have seen how it has helped not only record subscription for IPOs, but also the kind of frenzy we saw in the capital markets or cash market and the FNO. How do you see the liquidity scenario going into 2025? Towards the end of 2025, we saw stricter regulations for FNO, and that has impacted all players, including exchanges. So going into 2025, what is the kind of liquidity outlook that you have?
See, the liquidity depends upon the market which we are talking about. If you're talking of IPO market, I think IPO market is slated to do extremely well. If you look at the last year's record, we had a record of sorts of IPO markets. We had 90+ companies raising around 1.5 lakh crores from the market, and a significantly large number of small SME companies as well, around 240 companies raising around 8,000+ crores. Clearly, this year's pipeline appears to be good, and there appears to be good amount of liquidity to take all those offers. From an economy perspective, we need to say how many of them are OFS and how many of them are fresh capital formulation. Having said that, liquidity does not appear to be a constraint in the IPO market, given the number of times the oversubscription happens. In the mutual fund market, as you would know, it is a year of records that we are seeing year on year. And in the last few years, last 5 years, I must say, the number of mutual fund investors have almost doubled. And today we are talking about 20 plus crores of mutual fund investors trading across, investing into mutual funds across the country, mainly from Tier 2 and Tier 3 cities. Significantly, 50% of the investments come from there, showcasing to us the type of liquidity you see in these hinterland areas. In terms of derivatives, yes, there was a good amount of activity in derivatives that we have seen in 2024, raising concerns in quarters that whether there is a huge amount of retail participation, whether it is desirable, whether it will lead to situations which are not conducive for the development and growth of the market. So the regulators have intervened and brought in 6 regulatory steps to have a control over the burgeoning and growing volumes in derivatives, mainly coming from the retail. 3 of them have been implemented, 3 are going to yet to be implemented. Well, these measures have performed as they are expected to perform in bringing down the notional volumes. There has been a significant fall in the notional volumes. What will be the extent of reduction will depend upon all the requirements of SEBI being implemented, which will be getting done by April 1, 2025.
We are talking about derivative market here. So, from a premium turnover basis, I was looking at some of the numbers there for Sensex options. In October 24, we had the total premium turnover of roughly 1.38 lakh crores. That fell in November, and then in December again it has gone up to 1.74. So, and for the BankX, it has fallen from 58,000 crores to 13,000 crores. So there seems to be a shift in the turnover from BankX product, which was a weekly product, to Sensex product, which is continuing to be a weekly product. So are you seeing the same shift happening for the retail investors as well, or is it a separate class of investors which are taking part and compensating for the shift in turnover?
Certainly, you have rightly observed about the shift in terms of BankX volumes going down and Sensex volumes stabilizing. But if you look at it from a notional perspective, Sensex volumes have also gone down. The only thing which we are seeing is the quality of premium has improved. It's because the retail participation has come down and it is more of an institutional, proprietary and HF type of a participation. When I say institutional, more of a high frequency and proprietary type of participation, which is more predominant now compared to the retail, which naturally improves the quality of the premium, because they are looking into more, not the current week alone, next week and next to next week, and the monthly products. If you may recall, in the past we have been always making a statement that our goal is deepening and broadening of markets. As far as derivatives, the goal will come out as making the next week and next to next week and monthly products becoming more predominant and more looked into by the market participants. Because the derivatives is just not a one-day expiry game. It is about expression of views in the longer future. That's how it makes a better economic sense. And our efforts were on, and with the SEBI directive restricting the number of weekly products, people have started looking into particularly the more long-term player type of people who are looking into the market for an overall direction in the coming few weeks so that they can hedge themselves. Those type of people looking into the market is improving the quality of premium. In terms of notional, the volumes have come down, but the quality of premium has gone up, is the sum and substance of this at this point of time. But as I said, we have to wait till April 1 to see how this all ultimately spans out.
Just because you are an exchange, at the exchange level, we are seeing a shift of premium turnover going in favor of Sensex, which is there from BankX. But when we speak to market intermediaries, they talk about the fact that the volumes have really dwindled from the retail side of it because of the shift which has happened. So you're basically saying that institutional volumes have picked up, the prop trade volumes have picked up, and those have compensated for the fall in overall volumes which are there.
No, that's not what I am saying. The retail volumes going down has reduced the notional volumes from what it was before. but the quality of premium volumes are going up. What I mean by quality is the premium realization per contract traded has gone up. Okay. Why? Earlier on, if you look at Sensex, it was more getting traded on expiry and expiry -1 because the remaining part of the entire week was busy with multiple other expiries. Today, that is vacated, and also we have announced that soon we are shifting to Tuesday expiry.
Yes.
So which gives no sufficiently meaningful period for people to look into a contract and just not take a very short-term view of a day, a week or a next week or next to next week. When they trade for longer dated options, then what happens is the quality of premium, that is the premium per crore of notional traded, improves. So though the notional comes down, the quality of premium has gone up. That does not mean premium has hit the roof or anything like that, but the quality of premium is going up because of lesser retail participation and more of participants like HFTs, proprietary trading desk, and people who are intelligent investors who are aware of what product they are trading. Instead of not knowing what the product is and trading, now people who are consciously aware of what the product is, when they trade, they take a longer term view.
Do you think the curtailment of retail has plateaued or has bottomed out, or do you see further curtailment happening once the remaining 3 measures which are going to come into effect by February, March play out?
So as we talked about, only 3 of the 6 have been implemented. Remaining 3 will get implemented by around April 1st. The full impact of whatever the measures that they have been taken as against the purpose for which they have been taken will be a continuous assessment by the regulators and the market intermediaries like us and the market participants. Depending on the outcome, it will direct as to what should be the future direction for us. Fortunately, in India, the regulation creation is always a co-creative process. The regulators always bring out consultative papers, and those consultation papers are discussed in detail, and based on a consensus building method, the decisions are taken. So I think we have to wait till April 1 to see how the entire impact of all the 6 regulations take effect into market.
Mr. Ramamurthy, you spoke briefly about the fact that how the mid caps and the small caps have also performed and outperformed the benchmarks. Are you looking at new products which will cater to this segment? Because I think 2024 was a year when we saw a lot of mid-cap companies and the small-cap companies going into global indices as well because of the kind of value creation that they did, and they get eligible for those indices. Do you see more products coming for the mid-cap and the small-cap segment?
Product creation is a continuous process for exchanges, because sometimes what happens is when you identify a new product, they become more relevant for the market, and therefore it is important to provide relevant products to the market. And BSE has started its journey with our own index company which we have now. We are looking into new indices for which we will seek permission for bringing it to the market, subject to the rules and regulations of the regulator. Also, you might have seen the consultation paper on exchange interoperability, where the regulator has suggested that for every product that is available in one exchange, there should be a highly correlated product available in another exchange, so that in case of any situation where people need to trade in the other exchange product to hedge themselves, they have an opportunity. So we need to therefore work on, in any case, a mid-cap index product, which we are working, and as and when we are able to get the regulatory approvals, complete the process and do everything, we will give information to the market, advance notice, and then we will implement.